It's no secret that people from all walks of life have hopped into the cryptocurrency bandwagon, but you can definitely count Microsoft founder Bill Gates out of it. In fact, he doesn't buy the idea of it. For today's video, we'll be talking about Bill Gates and why he thinks crypto and NFTs are based on the dumbest theory. So if you're curious about what he has to say about this issue, then stay tuned to know more. First up, crypto and NFTs, according to Bill Gates, are based on the dumbest theory. The emergence of NFTs and cryptocurrencies, according to Bill Gates, is 100% predicated on the biggest fool idea. Bill Gates, a multi-billionaire businessman and the creator of Microsoft, claimed that cryptocurrencies and NFTs are based on a concept known as the dumbest theory. This assertion was made in light of the crypto winter and the sharp decline in NFT popularity. Recently, Gates took part in a TechCrunch discussion about climate change. The wealthy co-founder of Microsoft claimed that the emergence of NFTs and cryptocurrencies is 100% founded on the principle of the greatest fool. According to this theory, the price of overvalued assets will increase if enough willing buyers are available. In addition to this, Gates also took a jab at the Bored Ape Yacht Club's NFT collection. Of course, Gates was referring to the Bored Ape Yacht Club's famous NFT collection when he cynically remarked that expensive digital images of monkeys would undoubtedly improve the world immensely. In addition, the billionaire mentioned the cryptocurrency market and claimed he was not involved in any of that. Gates emphasized that he would prefer to invest in properties that provide observable outcomes, such as farms, factories, or businesses that produce goods. So, what's this dumbest theory Bill Gates refers to? The most ridiculous argument claims that market participants' fanatical optimism is to blame for financial booms, called the dumbest. To sell inflated assets to speculators, they purchase them. Gates uses this phenomenon to explain NFTs, which in his opinion have no intrinsic value. Gates also uses this about cryptocurrencies, where purchasers who are overly greedy are always present. This does nothing more than setting up a scenario where the first fool tries to avoid losing money by trying to sell the useless asset he bought to a less intelligent person. Almost like a loop, the process keeps going until the system gives way. The most stupid people, or the last layer of fools, are totally impacted. This scheme bears several characteristics in common with the Ponzi scheme. Market for stocks, real estate, and other assets have also been charged with operating like Ponzi schemes. But looking at it objectively, there's a semblance of truth to what Bill Gates had to say in line with what's happening in the crypto market right now. The words made by Bill Gates are in no way unrelated to the current situation. NFTs and cryptocurrencies are both struggling to return to their previous highs. The renowned and well-liked non-fungible tokens, NFT, of the Bored Ape Yacht Club, BAYC, have decreased by 78% since April. They were approximately $429,000 back then. Currently, the cost is roughly $80,000. Additionally, Google Trends shows a significant decline in the popularity of BAYC. The cryptocurrency winter has unquestionably arrived concerning digital currencies. Ethereum, ETH, and Bitcoin, BTC, are seeing a series of drops. Many argue that the wisest course of action in this circumstance is to purchase more cryptocurrencies in the anticipation that their value will rise in the future. According to Bill Gates, this would be the cryptocurrency market's exact trap. Despite the worrying crypto situation, it seems that Wall Street sees a silver lining in the markets. While some claim that the cryptocurrency bubble has burst, Wall Street is advancing to profit on what may be some fire sale asset values. Since reaching a record high of US $2.9 trillion in November, the market value of cryptocurrencies has fallen by roughly 70%, causing a wave of anguish and fueling rumors that numerous high-flying crypto businesses are on the verge of bankruptcy. The unilateral freezing of consumer accounts on shaky trading platforms is cited by cryptocurrency detractors as evidence that the bubble has burst. Although most financial markets have suffered bubbles, seasoned investors are more interested in the deals that will still be available when everything bursts, and Wall Street is about to start. And who else is lying in wait for such an opportunity, you ask? It's none other than the Goldman Sachs Group, along with a few others. One of the largest investment banks in the world, Goldman Sachs Group, is reportedly attempting to finance $2 billion to purchase distressed assets from Celsius Network, one of the first cryptocurrency lenders to halt withdrawals. Several other companies have since done the same, most recently the cryptocurrency derivatives exchange CoinFlex. Goldman is apparently evaluating interest from Web3 crypto funds as partners for any bid for Celsius. According to its website, Goldman had $2.5 trillion US in assets under control in 2021. If the claims of Goldman's interest are valid, the bank declined to comment in the story first published by Fortune, then it would only be interested in purchasing Celsius for 10% of its previous $20 billion valuation. Tony Sycamore, a financial markets analyst at City Index, a worldwide currency trading platform, said, "People are starting to see opportunities there. Distressed assets will attract buyers. The sharks begin to circle when there is blood in the water." To put it simply, aside from Goldman Sachs Group, Morgan Creek Digital is also looking for an opportunity in the middle of this crisis. Goldman isn't the only one looking for an opportunity in the middle of all these. Asset manager Morgan Creek Digital is attempting to raise $250 million US to oppose an offer from cryptocurrency exchange FTX to bail out another cryptocurrency lender, BlockFi, which is one of the businesses affected by the collapse of the crypto hedge fund Three Arrows Capital, 3AC. BlockFi is one of the firms caught in the fallout. According to reports, Morgan Creek is worried that the financing agreement with FTX, run by billionaire Sam Bankman-Fried, will provide FTX an advantage over the other investors by allowing it to acquire BlockFi at a fire sale price. Morgan Creek is one of those investors. "These businesses are taking a longer-term bullish view of the market," Sycamore said, of those looking for troubled assets. "Any cryptocurrency price rebound will depend on the US, and it is still months away." He said that the Federal Reserve was refraining from boosting interest rates. The current crypto crisis is brought forth by several factors, one of which is inflation, so the Feds are increasing interest rates in the hopes of battling American inflation. The Fed is boosting interest rates to combat American inflation, which in May hit 8.6%, the highest level in 40 years. It is indicated it will stick to the plan, and rates might rise from 1.5% to 1.75% from the benchmark federal funds rate later this year. The war in Ukraine, the COVID-19 pandemic, and Fed policy have all worked together to weigh down economies and markets in 2022, including cryptocurrency. After the Fed issued a 75 basis points rate rise on June 15th, Bitcoin lost nearly 40% of its value by mid-June and dropped below $20,000 US for the first time since December 2020. According to market analyst and former equity broker Andrew Sullivan, Goldman's interest in cryptocurrencies shouldn't come as a surprise. According to him, Goldman is attempting to keep ahead of rivals and is already processing cryptocurrency transactions for institutional and private trader clients. Sullivan asserts that these transactions give the clients a distinct advantage against other institutions, who are likely considering the same thing but far more cautiously. According to Sycamore at City Index, the macroeconomic events that are shaking the cryptocurrency market are huge earthquakes for the sector. It's unclear what the financial behemoth Goldman will be able to salvage from the ruins. About the rumored bid for Celsius, Sycamore predicted that they will probably find that $2 billion US without too much of a difficulty. But on what conditions? How long will they keep it on hand? We are simply unaware. While others are looking for opportunities despite the declining crypto market, a lot more are rallying for crypto to be eradicated. In a recent essay, business writer Michael Hiltzik argued that cryptocurrencies should be banned because it has no real-world use. The author claims that the crypto party shouldn't have even begun, because nothing being advertised or sold at this party has any real intrinsic value. They promoted cryptocurrencies as a counterbalance to a governmental authority, claiming that they were impervious to manipulation. However, it is also impossible to monitor, audit, or secure these currencies. Hiltzik claimed that cryptocurrencies are becoming mainstream. Small, less knowledgeable investors have been seduced, and they are the ones being put through the ringer in this financial crisis. They purchased at extremely high costs and are currently negotiating very low costs. A few of them lost their whole life savings. Hiltzik also expresses his rage at the promoters for intentionally duping people and at the regulators for allowing this to happen. However, he is most upset with the victims, since they should have been more cautious with their possessions. And unfortunately, we've run out of time, so that's all for today's video. As far as we know, this is a developing story, so if you want to see a continuation, make sure you hit that like and subscribe button with the notification bell on for more videos like this. Thanks for watching, and we'll see you again next time.